Good morning. It seems that the traders have been repeatedly wrong-footed in the past few weeks by the sharp fluctuations in the share prices. It seems that this volatile trend would continue for some time now. Investment advisors are asking retail clients to buy options as a safer strategy to ride out the turbulent phase. The opening is set to be muted with the Nifty hanging around the psychological 5,000 mark where it closed yesterday. The critical level to watch out for would be the 4,950 zone, below which some pressures could set in. US indices, which were up 1% in early trade, ran out of energy and ended in the red following concerns about BP's battle with the oil spill. BP's stock crashed over 15%. The Dow dropped 41 points after briefly crossing the 10,000 mark this week. The Nasdaq shed 12 points. The euro stabilized against the dollar, which was down 0.2% against the euro. US light crude oil for July delivery climbed $2.39 to close at $74.38 a barrel. Gold for August delivery slipped $15.50 to close at $1,228.50 an ounce. In Mumbai, the yellow metal fell to Rs 19,068 per 10 grams yesterday, down 0.9%. Asian stocks are higher following a rise in oil and metal prices, which added some weight to the commodity stocks. Phase out of tax exemptions and widening of the tax base are on the agenda. The 3G revenues and likely stake sale in government companies could well help the government contain the fiscal deficit. Reliance Industries is likely to enter the telecom space where the opportunity arises. Power Grid may sell 20% to public that could raise 8 billion rupees, which may be equally split between the government and the company. Air India to ground 15% of its flights if its employees do not withdraw their plan to strike work from June 11th midnight. The government would list 35 public sector companies over the next 5 years, and the move would generate about 150 billion rupees in the revenues for the centre. Bank borrowing from central bank crosses Rs 60 billion for third consecutive day at 5.25%. Government may modify new public holding rules. Automobile sale grew 30% at 12 million units as compared to 9 million units for the same month a year ago. Highest ever sales jumped since 1996. Moving on to the recommendations, the technical calls are a buy on Indian Hotels. Traders are recommended to buy the stock at levels of Rs 98 for a target price of Rs 105 and a stop loss is to be placed at Rs 96. And a buy on PFC. Traders are recommended to buy the stock at levels of Rs 302 for a target price of Rs 323 and a stop loss is to be placed at Rs 296. The derivative strategies are short Dr. Reddy June future in the range of Rs 1472 to Rs 1475 for a target price of Rs 1442 and a stop loss is to be placed at Rs 1488. And long Jindal Steel and Power June future in the range of Rs 620 to Rs 622 for a target price of Rs 636 and a stop loss is to be placed at Rs 613. Thank you and have a great day ahead.